and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Well, hello and welcome back to the Research Talks here on Stockbox with Alan Green. Alan, welcome back again. Another week. How are you doing?
It's Friday, Mark. It is. It's always good on a Friday, particularly when the sun's shining.
Indeed.
And there's a prospect of good weather over the weekend too, which I'm doubly looking forward to. But yes, all very well, thanks. And how things are over in at The Hague with you?
Very nice. Yes, we also have the nice, lovely blue, wintry sky. So again, looking forward to what could be a fairly nice, calm winter's weekend. Maybe a trip to the beach or something. Walk along and get some sea air. But we'll have to see. But yeah, all good, all good. So today we're going to be talking about first-class metals, aren't we? And of course, AudioBoom as well, which is a slightly unusual one to have on the podcast here. But first-class metals, they've been very active in this, what I said to Mark Sale the other day on the interview, this non-active drill season over in Canada, because the real season starts in about the springtime. But they're not hanging around, are they? They've been on the ground collecting grab samples, and pretty significant grab samples at that, planning for the active drill season. So first-class metals, Alan, bring us up to speed.
As you rightly say, Mark, first-class metals have been very active during the down season, as it were. But I think what anyone that has shares in first-class metals and is following the company on social media, and also the chief exec, Mark Sale, will just see this constant flow of news, video clips, updates from the company and its activities in this world-class mining destination, which of course is Canada and Ontario in Canada on the north shore of Lake Superior, which is a hugely fertile ground. Of course, the area that First Class are very much focused on has many quality producing mines. Of course, the Barrick Williams gold mine there with 23 million ounces of gold total production to date. And within that region, First Class Metals owns 7 highly prospective base and precious metal properties. So the company came to market last summer. It's won many awards, including the UK Investor Magazine Award for Best IPO of 2022, and I think with some justification. Came to market with a 6.5 million market capitalization, and of course the share price at 10p. Shares currently trading now at around 14p, giving it a market capitalization of just under 10 million, which I think, given the progress the company has made, still puts it very much, in my opinion, in bargain territory, considering the amount of news flow that's been generated, but also the new additions to the portfolio of assets that First Class Metal have delivered over the past few months. So what I'm going to do is go through each of the assets the company has, and then I'll bring listeners up to date on the news, or the most recent news, and the significant news from those assets. So to start with, of course, we have the North Hemlo property, and this covers 90 square kilometers, and it's on a shear which mimics the trend that is host to the Hemlo gold mine. Of course, I've already mentioned the production from there, but it's also significant in that it overlaps an area called the West Pickle Lake, and here there is a joint venture underway with a company called Palladium One, and Palladium One own the Tycho project nearby, which is highly prospective for nickel and other metals, nickel, cobalt, and copper, in fact. Of course, these metals are designated critical minerals in Canada and by the rest of the world, given the boom in clean energy technology, EVs, and so on. And the Tycho project, of course, is well underway with Palladium 1, but the geological anomaly in West Pickle Lake is contiguous with the Tycho asset. So, of course, a joint venture was formed with First Class that own Pickle Lake to enable Palladium 1 to undertake the drilling work. So in other words, they bear the costs of the exploration and complete a drilling program, which based on the success of that would see Palladium 1 earn in up to 80% of the asset. So, of course, given they already own Tycho 1, I imagine that if this goes the way we hope it goes, that Palladium 1 may well decide to take on the asset in its own right. But it's been a hugely successful program so far for the group, and we're looking forward to more news from this as it progresses, and we come up to the intensive drilling season this year. So from North Hemlo, we just dropped slightly further south to what is referred to as the ESSA property, ESA, and of course ESSA is a property that has a geologically anomalous shear, and again similar geology to the rocks hosting the Hemlo mine. And at ESSA, of course, we have seen significant amounts of soil sampling and work on the block there. So this is also going to progress as the year moves forward. In this region as well, if we move now slightly further to the west, we have four other assets. We have the Magical, McKellar, Enable, and Cocoa East assets. In Enable, there was a development over the past week, where the company it has already undertaken a significant amount of field work there, and the company identified this week a new gold and silver showing on the property. So the team are there sampling. They've identified through rock samples over 7 parts per million of gold, significant values in silver as well. So with Enable situated close to the shore of Lake Superior in an area called the Terrace Bay Batholith, there's a significant geological feature there that obviously forms the asset. So we expect to see further progress from the team on the Enable asset as the year progresses. So number of field visits, as I said, and it's a very, Mark Sale and the team said it's a very positive encouragement for its potential to increase and report on the gold assays in future. So again, to the western North Hemlo, I mentioned McKellar. This contains a historic multi-ounce or historical multi-ounces of silver grades, also copper and zinc values there as well, and the potential in the region for rare earth metals. So to the east, briefly, of the North Hemlo asset is the Sugar Cube property. This is a 40 kilometers square region. This continuous to the Silver Lake Sugar Zone gold mine. So again, contiguous geology, and the team will be running an electromagnetic survey over that lake as the year progresses. So there's an awful lot for the team to prepare for. Late last year, the company added a significant property to its portfolio of assets there. So if you move very much further west to the west of Lake Superior, the company acquired what it refers to as the Sunbeam property, which is an area nearly 48 kilometers square. This is located southeast of the Agnico Eagle Hammond Reef project, which is a 3.3 million ounce gold project. But this area contains the historic Sunbeam gold mine and other pits in the area that have been sunk as part of the exploration program, and this is hugely significant for the group. Sunbeam is a very significant asset for the company. Drilling work there was undertaken recently. A drill hole undertaken in 2021 reported best sample 93.3 grams per ton over half a meter, and that's 99 meters down. So of course it's a former producing gold mine. A lot of the historical workings are there. The structure hosting the Sunbeam mine is open in all directions, so it's, if you like, a ready-made asset sitting there. And of course, as we've said many times, Mark, with these historical assets, you bring modern mining techniques, modern data analysis to these assets, and new branches or new opportunities are discovered from historical workings. And really, as a prospect for a mining company, it has to be a better prospect, I think, than starting from scratch in many ways. So that's the latest from Sunbeam. The team will be on the ground there this year, so no doubt we'll have more to report on that as the year progresses. The most recent development is an exclusive arrangement in an area called Zigzag Lake, and Zigzag is to the north of the Hemlo assets. This area is close to other workings and other mines in the region. There are sort of many different recordings in this area of energy metals, and these of course include lithium. They include rare earths and a number of other prospects. There's an arrangement now to earn into this asset, and what was particularly interesting was the company has a 60-day exclusivity agreement. Funds were raised to progress this asset from a single high net worth shareholder in the group, and these funds are raised at 16p per share. Remember the IPO price at 10p per share, and indeed there were some warrants issued with the raise at 12.5p. A lot of those warrants are being exercised now because investors are seeing this burgeoning value within the group, and the fact that this high net worth put this money in at 16p really sets a benchmark for the valuation, the valuation of the company at the time. And of course, I think we're going to see further developments that will bring further value to the group as the year progresses. So within this what's referred to as the Zigzag Lake area, a structure of some 800 meters has been identified, and this contains lithium and tantalum mineralization. And of course, these are mostly identified within pegmatites, and a number of other metals have been identified with this. So of course, Mark and the team, have got a very exciting asset here to work on and develop too. And when the company came to market last year, Mark and the team promised an avalanche of news. They delivered an avalanche of news already, but I think they're only there's a sense to me that they're only just getting going, because with the other assets they're now bringing on stream, they're going to need to increase the size of their operations to cover these assets, and I'm sure we're going to see an awful lot more from the groups through the year. So the news is going to come from every direction, not just one direction. We're going to get further developments from the drilling at West Pickle Lake and the North Hemlo property. We're going to get further developments from the Essa property. The team will be on the ground at the Sunbeam and the historical gold mine workings there. We'll also have news, I'm sure, from McKellar and Sugar Cube this year. And of course, as the team works on the Zigzag Lake project over the next 60 days, we'll have further news and further ideas on the prospectivity that the Zigzag Lake will deliver to the portfolio of assets owned by First Class. But a very exciting period, a superb share price performance from the company since IPO, and I think every prospect of an exciting year and a real value idea for shareholders in prospect.
I think it certainly can be, Alan. Yeah, given the news flow that is due to come, as you sort of presented there, it's definitely going to be. It's not going to be a quiet year, news flow wise and activity wise, for First Class Metals. And funnily enough, just as you were talking there, a research notice just popped into my inbox regarding First Class Metals. I want to ask you first, though. Would you want to put a prediction on value of the company, on share price value? Would you be prepared to do that before I tell you what this broker note suggests?
Well, I can imagine what the broker notes indicating, but I would say cautiously and pragmatically, given the rate of development and also where mining companies are now. But I think First Class have delivered success on success, value add on value add since they've come to market. And meeting the guys at the Mines and Money show last year, they are hugely ambitious, hugely excited about what this year is going to bring. So I think we're going to see 30p by the summer in fairly short order. But that's just my view.
30p. Okay, well, that's 1p more than the broker note that I've got in front of me here. 29p. That
Okay,
puts it
there
up.
you go.
But that's effectively, doubling, isn't it? Almost. I mean, you've got the market cap of currently 10 million. It's not going to be too hard to get that to 20 million, given the activities that are going on. I've seen companies ranging from, that kind of value up to sort of 30-ish million on, very early stage exploration projects. So I don't think that valuation is ridiculous at all. It's very realistic.
I think it's very realistic. I mean, Palladium One are currently valued at 24 million Canadian dollars, so a not dissimilar valuation. But I think, given the raft of assets First Class Metals have, and the experience in the team too, that's hugely significant. Mark Sale is a hugely experienced geologist, but also the rest of the board. There's an awful lot of experience on the board. We have James Knowles, of course, who is the chairman, and I had a long chat with James last year. He's huge experience in the city, but is also a seasoned investor. And I think we see with other investors, poachers turn gamekeeper, if you like, as we see with Darren Hazelwood. James is very similar. He's a long-standing investor, lots of experience in this area. So he's chairing the group, and of course looking after the development and structuring the funding of these assets going forward. But I mean, Mark Sale, formerly worked for Brandcoat PLC, Gold Mines of Sardinia, Patagonia Gold, Landor Resources, and he's just vastly experienced in this area, in this region. But he knows how to communicate too. Also on the board, you've got non-exec directors, Mark Bamber, who's a corporate financier with 20 years experience in the hedge fund sector, Aya Bodhi, who's got years of experience in the oil and gas industry, Dinesh Varma. I've known Dinesh personally for years, and Dinesh is director of Labrador Iron Mines Holdings, of course, Labrador and Canada, Buckens Resources, Canadian Manganese, Minco, Anglesea Mining, and a bunch of others. And then Nick Lee, who's a consultant to the group as well. So a huge experienced team with a lot of experience in Canada. That's very significant. So they understand the jurisdiction, they understand the workings there, the infrastructure, and how to get things done. And boy, oh boy, our First Class getting things done.
Indeed. Okay, well, let's talk about AudioBoom then, Alan.
AudioBoom, yes. So this is a platform that I've long been aware of, through our work with podcasts and recording with other service providers. AudioBoom has been a platform of choice over the years, and I guess you can look at AudioBoom and say they've done for podcasts what YouTube have done for videos. That essentially is the is the basis of it. But of course, many other podcast platforms have entered the market and become hugely significant players. But AudioBoom themselves are a global leader. The shows are downloaded more than 130 million times each month by an audience of 34 million unique listeners around the world. And Edison Research did a detailed note on podcasting and podcast providers. AudioBoom's ranked as the fourth largest podcast publisher in the USA by Edison. And that's, of course, as with so many things, the US is the biggest market. So its platform is underpinned by a raft of content that it produces itself. And these include podcast products, including Dark Air with Terry Carnation, Formula One Beyond the Grids, there's Relax, Covert, Mafia, Huddle Masses, What Makes a Killer, and a raft of other stuff. And of course, the operations and partnerships the company has are across North America, Europe, Asia, Australasia, and of course the platform itself is distributed across Apple Podcasts, Spotify, Pandora, Amazon Music, Deezer, Google Podcasts, iHeartRadio, Radio Public, Stitcher, Facebook, Twitter, and so on and so on and so on. It also generates a lot of money through ad tech, through its ad tech, and it has a premium network of 250 top tier podcasts. These partners include Case File, True Crime USA, True Crime Obsessed. Everyone seems to be obsessed with crime and whodunit. The Tim Dillon Show, the cycling podcast in the UK is hugely popular. So it has a diverse and vast range of podcasts that it operates and earns money from. So the group itself, the chief executive is Stuart Last, and that name may sound familiar to a lot of people. Stuart Last, of course, is formerly BBC Radio 2 controller, also ran the BBC Radio 1 Live Lounge for many years, and Voxnest. The chairman is Michael Tobin. Michael Tobin is well known for his work with Big Blue Broadband and Telecity, and Chief Technology Officer Brad Clark also is formerly of Amazon and Spotify. So Nick Candy there is a 14% shareholder in the group. So there's a lot of major shareholder support from key figures. But the company really has had a fairly dire year in terms of its share price performance. And I think what's intrigued me here is the company has come down from its former highs and is now worth just 65 million. So in terms of the audience it reaches, in terms of the turnover it enjoys, that seems to be very much at odds with what's going on with the company. I mentioned before we came on air, Mark. Of course, many well-known people out there in the sector have had a right old pop at AudioBoom. But I think it's just worth looking at what the company has achieved. It provided trading updates a few days ago, and this is the update for the trading year to December 31st. So very current, very relevant. It's grown its revenue by 25% to 75 million. EBITDA has grown by 16% to $3.6 million. The revenue quarter four grew substantially, 14% over last year to 16.2 million. And also the monthly downloads grew 3% to nearly 111 million. And also significantly, its revenue per 1,000 downloads grew by 11% to $55.6. And that, of course, is a key metric going forward. If you're growing your revenue per downloads, you've got per 1,000 downloads, you've got a very successful model and a model that's already growing. But also, the company's got $44 million already contracted for 2023. I mentioned, of course, the Edison Research Notes fourth largest publisher in the USA, and that's only beaten by Spotify, SiriusXM, and iHeartMedia. So So that's hugely important. Going forward, the company's got $8 million in cash, and that's up from $5 million previously, and it also has a facility of 1.8 million. And the company, is well placed going forward. Michael Tobin, the chairman, said the company faced really challenging economic conditions in 2022, which prevented even stronger financial growth from the group. But the quarter four performance, key performance indicators, all showing confident group. It's moving forward fully primed for further growth as the advertising market improves in the current year. And Stuart Last said the same thing. It was a year of significant cash generation, global economic headwinds, of course, the uncertainty, inflation issues, all of that. But I think, the podcast market is starting to mature now. The way people listen to podcasts, we listen to them on our way to work, on our way back from work. So it's a very portable industry in that regard, and very easy for people to get engaged with and listen to these broadcasts. So looking forward, the company said in the coming year, it's going to restructure the sales organization to ensure it remains competitive. There is uncertainty in the advertising market, and of course that I think has been a primary factor in impacting on the performance of the group, and also bringing the group down to the capitalization it has now. But to my mind, looking at this, you've got a market capitalization that's worth less than the revenue the company turned over for last year, and I think that uncertainty is based on the outlook, nothing more. I mean, the company has cash. It's got 8 million cash there. It's got it's generating positive EBITDA, and that's the most important thing. So I think going forward, depending on what your view is on the podcast industry, I think podcast looks to be a platform that could well recover rapidly. But of course, that's going to be driven by advertising. There's also the other factor too. This is an intensely competitive industry. It's an industry that is consolidating. So surely at some point it has to be an attractive takeout proposition to the larger players, such as Spotify, such as Amazon. So from that standpoint, I think the shares could well offer a speculative, will be attractive as a speculative buy proposition, given that it's a bet on an improved advertising market, and of course a potential M&A activity from some of the bigger players.
Well, yeah, if it's to do with concerns about the advertising market, I mean, that'll come back as quick as it went away, won't it? When the sentiment comes back. In terms of podcasts, that's not going anywhere, I don't think. I can't see what would stop people consuming podcasts. As you say, it's a growing market that people enjoy to listen to so many different topics. So I think the business model there is sound, and maybe it was to do with the speculation. Was it because there was a takeover, wasn't there, that was rumoured and then kind of didn't materialise? So maybe it got a bit overheated, and it's sort of now pulled back a fair bit. But still some value to be had there for sure. If its market cap is underneath its current turnover, for sure there's value to be had.
Well, I think that has to be the case. I mean, of course, they earn in dollars. The market capitalization is in sterling, so it's pretty much on par.
Okay.
With of course revenues, but of course it's the EBITDA number that's the significant number, the earnings before interest, tax, depreciation, and amortization. But I think that's got to be the focus. The M&A activity is always going to be there, the prospect of that, and the fact that it was a failed takeover bid. Didn't materialize, left a nasty taste. A lot of pundits out there, a lot of the pundits out there were really slating AudioBoom. But I think ignore that. Just look at what the company are doing. Look at the underlying business model. Look at the renewals. The fact that it hosts such a diverse range of hugely successful podcasts. It's adding to those all the time. it's also that metric, the revenue per 1,000 downloads. It's grown that by 11%. And as you rightly point out now, just now, Mark, the advertising market goes away quickly and it comes back just as quickly. So that could change very quickly indeed. And I think if that happens, if we see an upswing in the advertising market and a trading statement, say from AudioBoom in a few months, that reflects that upswing, then it could be very much back in play as an M&A or for M&A activity. Either way, I think it's looking really good value at the moment, given that we're on these or we're at these multi-year lows.
Excellent. Well, thank you very much, Alan, for your time again this week, giving us the investment case there for both First Class Metals and AudioBoom. And I wish you a pleasant weekend, Alan, and we'll speak again next week.
Many thanks, Mark. Have a great weekend.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.